But let's assume weekly has created a break of structure of this kind. Let's assume it has created a breakout phase. So how do I correlate it with a daily time frame? Now, if weekly has broken breakout structure, now for me to easily enjoy this continuation when weekly is continuing, this we call it the markup phase. So I can go and look which time frame has just dominated. Is there a daily breakout structure outside this weekly range, within that weekly? Then I'll use that day for continuation. This happened on Euro Audi. That was last month when weekly had broken down. We had so many days that we're using. We pick the current daily breakout structure. Yes, we ignore the old ones.
Okay.
So if daily breaks a structure and didn't come back on that day, created another one, we follow this one.
Yeah.
So I'll always I'll use the daily. If there's no dailies, then I'll use the H4s that are here.
Yeah.
You see that? But then when there is daily and H4, I have to be so patient. But there are some mistakes traders do. They're not always patient. There is a daily, he wants to take on this H4. Now, he takes on this H4. Sometimes it can work. Sometimes it can fail. And they just come back to the daily and they continue.
Yeah.
So basically, you have to be very loyal to your trading principles.
Okay.
So this is how I trade the breakout phase. I look for which time frame is dominating. Then I can continue with the weekly flow. Then what if weekly is doing a pullback phase? How do you know that weekly is doing a pullback phase? When weekly breaks structure, and for example, inside there we have daily higher highs, higher lows. Now, if daily breaks its own last higher low here, there's a sign that weekly is also doing a pullback phase.
Okay.
You're getting?
We have a break of structure here. So it means we are likely to have a weekly pullback.
The moment I always see daily is breaking, I always notice either week is doing a pullback or it is reversing, as you're going to see. Because daily is the immediate time frame next to weekly.
To the weekly.
I remember what I told you, big boys execute using a daily time frame because for them they trade long term.
Yeah.
You see that? So if daily changes direction, what you call change of character, what you call shifts, because shifts are designed by the market makers. So this one I can get to know that week is in a pullback phase. That's when you see weekly candles are broken structure. Then you see one bearish weekly candle dropping. So you need to go and see, has it broken a daily higher low? So sometimes price can do either come back to this daily to continue down, or it may not even allow and go and create another daily breakout structure for sales. Executing that. If it's the one dominating. If it's not there, sometimes we may even have H4. When H4 changes direction, we don't have any daily. Still weekly can be doing a pullback. As long as if there is no daily.
Okay. So you execute, that means you're going against the trend. The weekly trend was doing this. So it's like, if I have a pullback on the daily or for H, should I take this opportunity to enter on this pullback?
Yeah, you can. We are going to see that under entries.
Okay.
But the mistake traders do in pullback is that they misuse time frames. Let me show you that. How? For example, let's assume this is a weekly breakout structure. It's now retracing. And maybe let's use this one as a daily. Now that's a day. Then you find out that in H4, we have another H4. Now the mistake traders, they want to execute to this H4. They're forgetting it's daily, which is dominant. So that's why you can get your profits of view once, then they come back to the daily and they draw. You're getting. Now that's the mistake they do. Or they use the H1s. They want daily appears. Ignore the H1s and dailies. You only get the
H. You all ignore the lower time frames.
Now if it comes and press another daily, you go with that recent day.
Okay.